I'm tapping back in from like the last video. We've took one trade since then, and it was the final trade of the week. Today is Friday. I did not trade today. I only traded Wednesday after Monday when I took that loss, and yeah, it was a win. So currently puts us up higher, profitable. Currently 3 wins this month. And yeah, we've already done a recap of all that last video, so I don't really say that, but the last trade we took was a win on the 16th, Wednesday. We took some gold buys from 2670s, what happens when you only take a few trades. You can remember the price points and exactly what trade it was. So far this month we have took, if you count the 30th of September, technically this month we have took 7 trades so far, and we have still got 2 weeks left of October. So yeah, nice trade. We can maybe go through it a little bit, why not? So this is the last trade that we took. It was on gold, New York session, and it was a buy. What I was looking at when I was assessing price on Wednesday after London session, around the 2670s, price pulled back from new all-time highs. This is the 30-minute. So we just brushed past the new all-time highs on Wednesday and made a correction back down to the 2670s from the highs. Small intraday correction, really, not really that big, but the key thing is we retested the previous resistance. That's what this green box is. A previous resistance level that we broke above in the early sessions of Wednesday to make new highs, new daily highs, new weekly highs actually. And then from those highs, because we're coming into New York session, and this is like the key time I trade, and normally if we're making like new highs coming into like NYSE open, there is going to be a good chance of like a small profit taker move maybe before we continue the trend. But if there's data and it induces a larger pullback, then we could possibly like drop. There was no data on Wednesday for New York session, well, for USD, sorry. So there was no data in focus. We were just basically taking buys based on the current fundamental factors being future rate cuts, central banks increasing gold holdings, China doing stimulus because of the weak economy, geopolitical tensions, like lots of war going on nowadays, that increases the safe haven bid on gold. Hasn't really been USD outflows this week, because that's another weird thing about USD. That's why you can't, it's not a direct inverse of gold USD, because of it can just move with it. And that was an example this week that the DXY moved all the way up with gold as well. But risk asset greed is definitely one of those factors, as it takes a lot more to fade out the greed of like the stock market, assets that the 1%ers want to make profit on. So yeah, we're just continuing with the gold bullish trend, not trying to fight it because there was no data to actually conflict that. So price came down, pushed below 2670s, made a new low after correcting the initial move up, as we just talked about. Price bounced immediately from like the area where the previous resistance that was broke was, so we retested it then, but we're still bearish on the lower time frames even if we've had this bullish impulse and move. So I didn't do anything at that point. I waited until we pushed back below 2670s, and we actually pushed deeper than the previous lows, so that technically means that we're still bearish again, because we just made a new low on the lower time frames. So what I was currently waiting for is a new pullback to be made on the lower time frames, and then a failure to break that previous low that was made, and that's what we got. Price pushed back down, failed to break, created a double bottom formation, and then price pushed back up and went for those previous highs. I got in because this was like perfect timing for me, well after London session close. We were in the right area for intraday AOI, previous broke resistance, pull back to retest it. Price started shifting to the upside, failing to break new lows on the lower time frames, it was perfect for me to continue taking buys back above 2670s, and we could have a comfortable stop below the previous lows. Now, sometimes I might just have a stop that's like 50 pips just to keep it out of the way and give it some room. But to be honest, because there was no data and it was quite late in the day, I didn't really feel that confident the price was going to run as crazy as it did. So I only aimed for around 100 pips on this trade instead of like 150. If I had a 50 pip stop, I would have went for 150, but I decided to, I think I only had around like a little bit over a 30 pip stop for this. So I had a little bit of a tighter target at 2680s really. So yeah, just 100 pips up from 2670s, and we had my stop loss around 2667 basically. We can see how this played out. So we did push, is this right? Yeah, we did continue to push up, break those previous the previous lower high that was made on the lower time frames. So we shifted bullish structure. This was perfect. Impulsively, we even went towards this other previous lower high that was made before. As we talked about, it was made just after London close as we pulled back from the new lows. It just brushed past breaking these, and then that's where we saw rejection, and we started to see like a minor pullback. Price ranged. As I'm watching this, I'm knowing in my head that lower volume is happening, and the volume is basically dying as we go towards the daily candle close. But as price range, basically we did slightly edge up above this lower high, which is again breaking highs on the lower time frames. And then we created a small lower time frame range between 2673, no 20, yeah that's right, 2673 and 2676.75 ish. Created that nice support around that 2673 area, did not break up below, and then we continued the trend on into the new daily candle where volume picked up in the London session and stuff like that. Well, Asian and London session. A London session open, we just brushed past the 2685s, and then by pre-NY hours we pulled back before we continued on and made new all-time highs. Because price like rejected the previous all-time highs when it pushed up on in Wednesday, I had a feeling that possibly price could retest that again, but it might fail to break it again. So, and we could see like a high time frame accumulation happen. So yeah, I just wanted to be a bit skeptical there, and I decided, and because I could, it made sense to have like a tighter stop. I could get that 1 to 3 earlier rather than trying to go for 150 pips. I mean, if the price action was different and I had to have a 50 pips stop, I wouldn't have had an issue with that. But because I could get away with it and have a tighter target as well, I did so. But price ran on even afterwards, so even if I wanted to have a 50 pip stop for just to be extra cautious, I could have got that 150 pip target as well. We were at new all-time highs going into New York session on Thursday, so I didn't touch anything there. Obviously the buys just pretty much extended after that into Friday. Yeah, we had pretty mixed optimistic data on Thursday that obviously didn't really hold too much weight to have like a data induced pullback from the all-time highs or whatever. So again, the greed train was just fueled and gold went and printed into new all-time highs, because like I said before, it takes a lot more to fade this greed and fade the current narrative of risk assets going up. I just wanted to update you guys on the next trade I took and prove that like losing streaks, they happen. If you stick to your hedge, you're going to win another trade again as long as you stay focused and follow your plan. Losses happen. I don't care how anyone else trades. I just care about my own trading performance. And if I can provide some value to other people, I'm more than happy to do that.